Is it better to rent or is it better to buy in South Florida?
With everything going on in the South Florida real estate market, everything changing, all the economic and political uncertainty, that's a good question. How you should look at it as a buyer or a renter really makes a big difference. Things that you can do to determine what's best for you, what things you need to consider, and more importantly, what are the things that you need to look at before you make the change. Today, we'll spend a little time talking about buying and renting here in South Florida in this kind of changing market.
Welcome to our channel. I'm Suze.
I'm Kev.
And it's Living in Fort Lauderdale with Kev and Suze. You've come to the right spot. If you're looking or thinking about moving to Fort Lauderdale,
check us out. And if this is your first time to our channel, welcome. If you've been here before, certainly welcome back. We appreciate any kind of comments or anything like that. Just drop a little note in the box below.
Yeah, this channel is all about living in Fort Lauderdale and the surrounding areas. Let's look at some of the reasons for renting. What do you think some of them are, Kev?
Well, obviously the first reason is less responsibility. Something to consider when purchasing your first home are all the costs that come with owning it. What we mean by this is, what are you responsible for if anything goes wrong, the roof messes up, something breaks, so on and so forth.
Or if the air conditioning goes in.
Exactly, you need a new washer, new dryer, whatever else. With renting, a lot of these costs are covered by the landlord or covered by the management company, so they don't come out of your pocket. So there's a little less responsibility. Also, with some of the rentals down here, which you get some of the costs that are covered, water's covered, trash is covered. In many cases, cable and internet are covered. Also, some of the fees that go along with the amenities, the pool, the clubhouse, and everything, that's included in your rent. But also, whether renting is cheaper also depends upon whether the renters invest what they would have spent on a down payment for a home, and any of the saving that they would accrue from that, are they investing it, and are they investing it at a higher rate of return than if they purchased a home.
So in other words, that if you're thinking about renting and then you decide that you're going to want to buy, if that's the case, then you're going to want to save money.
Right. If you look at it from this perspective, from the standpoint of the initial cash outlay, now understanding that most places you rent are going to require first month's rent, last month's rent, and a security deposit. But even then, if you look at it from the standpoint of putting money down on a house, you're going to come out of pocket usually a lot more money cash-wise coming out when you purchase a home, and you want to make sure you got everything covered off. But the other thing you want to take a look at is really how much is that? If you're looking to rent a place at the average rent in South Florida here, let's just use the $3,000 a month average. First month's, last month's, and security deposit, you're looking at about $9,000 or $10,000. Your moving costs, regardless of whether you buy or whether you rent, is kind of the same thing. Now, depending upon how much you're purchasing a property for, and whether it's a single family home or a condo or a townhouse, and the types of mortgage that you're getting, be it FHA, VA, conventional, or whatever, in some cases that $10,000, $9,000 or $10,000, that could be more than what you would pay for a down payment on a house, or it could be less. The way that we kind of look at it as a rule of thumb is, if you've been saving to buy a house and you have a nice little rainy day fund set up where you can cover off at least 5 or 10% down, then you're probably in pretty good shape. The other thing is that, are you looking to be in this location for a long time? Now, when Susan and I came down here a number of years ago, we initially rented, and the reason for that was we were not as familiar with the area as we are now, and there were some of the things we wanted to take a look at. But we also have some friends that were transferred down here by virtue of who they work for, and they basically told them, this is where you're going to work, look in this proximity here, and they went ahead and purchased. So it really comes down to kind of a personal choice.
Yeah, and how long you're going to be at that particular residence.
Exactly, and also how much money have you stockpiled to do that. If you think about it from the standpoint of what happens next, when you purchase a home, okay, especially in this market right now, you can always sell it. There's a lot of what comes from trying to sell your home versus the simplicity of renting. If you rent a place and you like where you are and you can renew your lease and you're happy with where you're at, and we have a lot of clients that are like that. Mm-hmm. They've been there for a couple years, they love it, they're not going to move, the landlords are happy, everybody's happy, everything's cool. So with renting, you can virtually choose wherever you want to live and move around each time your lease is up, or if you see something you like better. But the big thing is also think about where you want to be. If you like the location that you're in, or if there are external reasons why you need to be in that location. Maybe you're working for a company that requires you to be in a certain proximity to where you work. If you are in the medical profession, or if you're in the legal profession where you could be on call or anything like that.
But you also want to look at the amenities around, maybe
exactly.
Possibly the schools, the parks, and the restaurants.
Exactly. The other part of it too is flexibility in pricing, okay? When you buy a house, you're going to pretty much negotiate on how much you're going to pay, and depending upon whether you live in a homeowners association or a condo association, they're going to kind of dictate part of what your monthly costs are, as will the mortgage that you get on it. So renting has a little more flexibility when it comes to pricing. So basically, you're just paying the rent. You're not paying the taxes. You're not paying the insurance on it. Well, you will pay a little bit of renter's insurance, but
yeah, most definitely.
Okay, but basically, you have a little more flexibility in pricing when it comes to renting. You can also kind of focus your searches on basically what you want to pay. If you want to cap it out at a certain amount, you can look for certain rents that are offered in a certain area at a certain rate. Whereas when you go ahead and decide to buy, it's going to be a little more fluid. So you need to kind of be cognizant of that. The other thing is that going back and comparing what it was going to cost you from a mortgage perspective versus what's going to cost you from a rent perspective is cut and dried as people may think. I mean, you have principal, you have interest, you have taxes, you have insurance, you may or may not have maintenance fees, you may or may not have renovation costs depending upon the condition of where you're going in. And sometimes some of those things that you don't necessarily anticipate initially can come back to kind of bite you. Let's say you find a place that you think looks great. You fancy yourself to be a home improvement kind of guy. You get in there and you find out between everything that you need to do, everything that you want to do, and oh, by the way, those little things that crop up on a regular basis like work, you don't really have time to do it. So you have all these great plans about changing this and fixing that and doing that, okay? And you don't get around to it, but you need to kind of take that into consideration. And the other thing is, especially in this economy right now, sometimes the cost of getting even simple things like furniture and appliances and the time it takes to get those. Suze, how long did it take us to get our furniture?
So, a good 8 months. And then you always have to worry about the snafu. I had to order a mirror and the mirror came in broken, had to reorder. So you've got to also consider those points as well.
On the flip side, when you rent, you pack up your stuff, or if you're fortunate enough to find a place that's basically being rented furnished, you basically just bring your suitcase, your toothbrush, and you move on in and you're ready to rock and roll. Kind of our recommendation is to pay your desired rent price in rent until you have enough money set aside to basically purchase, if that's your end goal. There are a lot of folks to whom they just like the idea of being able to be somewhat transient. They like the idea of being able to say, hey, look, Fort Lauderdale looked great this year. Maybe we'll go to Deerfield Beach next year. Maybe we'll go to Aventura the following year. They like the kind of flexibility in there. But you need to make sure that whatever it is you're doing, that you have enough money to take care of things that crop up. And we will tell you that initially you're going to be coming out of pocket a little bit more when you purchase than you will with your rent. On the flip side, with purchasing versus renting, eventually what you're going to see is that you're going to see a much better return on the money that you invest when you purchase than is if you rent.
So what are some of the reasons to purchase?
First of all, mortgage rates have been low, but they won't always be. Due in part to the pandemic, and mortgage rates have plummeted to basically all-time lows. They have crept up a little bit over the past couple of months. What that has really done is having those lower interest rates have really been prompting people to kind of take a leap from renting to buying. Low mortgage rates play a significant role in your total loan costs. On a 30-year mortgage for the first easily 18 to 20 years, the majority of your payment is going to be in interest. So the lower you can get that interest rate, the better off you're going to be. And rates are still at an all-time low, and with the stability of a fixed payment as opposed to some of the other rising costs like an adjustable rate mortgage, or even if your rent is going to go up, and your rent will go up on an annual basis. In fact, in some cases, we've actually seen rent going up every 6 months. So interest paid over the life of the loan when you buy a house, it's predictable. That you know that you're going to pay X amount per month. That amount is going to be made up of 4 things: principal, interest, taxes, and insurance, okay? And you actually, in some cases, you even have an option of whether or not you want to escrow for the taxes and insurance. Most mortgage companies prefer that you do. We kind of suggest that you do because it makes things a whole lot easier. But again, you're going to have basically a principal portion of a payment and an interest portion of the payment. As the years go on, the amount that goes towards the principal goes up, the amount that goes towards the interest goes down. So basically, but you're still paying the same amount. So if you have the ability to purchase now, especially with the lower interest rates, now's a great idea to go ahead and do it. That should prompt you to kind of think about purchasing, especially here in South Florida. Property values are increasing. Now, property values are increasing everywhere in the country.
Yeah, across the country, you're right.
And they are. But here in South Florida, it's increasing at an even higher rate. And it's for a couple of reasons. Number one is I'm sure everybody's heard about the number of people who are coming to Florida from other states. Florida and South Florida specifically is in a very unique situation. People who have primary residence here in South Florida and the number of second homes and vacation homes, the ratio is almost equal. You will not find many other states where, for example, pick Kansas City. We just happen to have a client who lives in Kansas City who's looking to buy a second home down here in South Florida. So in Kansas City, for example, you don't have the high ratio of vacation homes or second homes to principal residences down there. And with property values increasing, if you can still get lower interest rates, as property values increase and the interest rates stay low, you're still able to qualify more and you're able to get a little bit more to kind of keeping in line and keeping in step with how the property values are increasing. What other folks have kind of considered, additional costs to consider from transitioning to purchasing to buying, okay? So in addition to the monthly mortgage payment, I mean, you have costs that you are now going to be responsible responsible for. Those costs can include everything from maintenance to repairs to landscaping.
Oh, and don't forget painting.
God forbid something breaks. There are homeowners insurances and all that kind of fun stuff. We get into that much later. Check out our video on homeowner warranty versus homeowner insurance. When you purchase your own home, you're responsible for those things. Kind of consider this. If you're considering purchasing a property here in South Florida, now is probably one of the better times. However, if you're considering buying, now is as good a time as because property values in Florida are rising. Depending upon some folks, it may have capped. We're not 100% sure about that. It really depends upon the type of property, the area that you're in, and everything else. Purchasing a property is a good investment of money because at the end of the day, you're going to incur an expense for housing. Whether that expense turns into an investment in your own home or whether that expense turns into paying into investment into somebody else's home, it's kind of up to you. Unlike when you rent, when you buy, you're putting equity back into your home. You're meeting your monthly housing expense obligation by putting a roof over your head, but you're also increasing the value of an asset that you own, which is kind of good. And actually kind of an interesting thing I read recently was according to a study by the FloridaRealtors.org, the average Florida home in 2020 had about $69,000 worth of equity. That's a significant amount of cash to be able to call on if something came up or to be able to use for an investment. If you can borrow that money at 4 or 5 or 6% and turn around and reinvest that at 10 or 12%, there's nothing wrong with that. And the other thing is that as recently as last year, the average amount of equity across the U.S. is at a record high. In fact, the average mortgage holder now owns about $185,000 worth of equity, and it's increased by almost $48,000 since 2021. You're seeing the power of owning your home, and you're seeing the power of having your investment grow, and you're contributing to your own investment. And the rapid rise was partly driven to the increased price valuations because of COVID and because of the reduced inventory that was available both nationally and of course here in South Florida. Inventory is still very, very low. We do have a fair amount of condos down here, but single family homes and townhomes, because there are fewer of those than there are condos, the inventory is still really, really low. As such, the price of the houses are increasing.
That's true, but we are seeing a little bit more properties are coming on the market. What is expected to happen to the home prices?
My magic wand is in the shop and my crystal ball is a little cloudy because of the weather. In all seriousness, two things. Number one is that contrary to the opinion of some, the state of home prices has an impact on both the purchase and the rental markets. So it's going to impact both sides of it regardless. Most real estate experts believe that because of higher interest rates, basically it'll force the price increase to slow down. That may mean the end of double-digit increases. Prices will continue to rise just a little bit slower. Some folks even believe the prices might fall a little bit in parts of the country where they rose the highest. For example, South Florida, Texas, California, some of those areas, we basically saw rocket type growth. The first thing to fall is going to be the home sales. What's going to have to happen in order for those prices to come down is the number of homes that are selling and closing. That's going to have to come down because otherwise you're going to continually having inventory chasing the amount of properties that are available. And right now it's a very, very, very strong seller's market because basically law of supply and demand. There's a hell of a lot more demand here in South Florida for homes than there is a supply. And that's going to basically keep the prices going up. The other thing is that I think it was the Federal Reserve in Dallas mentioned that they thought that there was going to be a burst of the housing bubble, making very, very vague and very, very ominous references back to 2008. Back in 2008, people had leveraged the values of their home to the point to where there was no equity left in there. You saw people who basically kept refinancing and refinancing and refinancing. They were chasing the value kind of up the hill. They got to the point to where they had $600,000 mortgage on a property that really couldn't even be sold for half that. Okay?
So you're upside down.
So you're basically upside down. What's happened is that little ominous thing that was leaking out, that kind of snuck out, is because they're also concerned with the housing bubble bursting, if you will, because the number of people who were suffering from FOMO.
What did you just call me?
Fear of missing out. For people who didn't get a chance to basically get their home out there at just the exact right time to get the maximum amount, that's not coming to fruition. Other part of it is a lot of folks are also concerned about, inflation. Inflation has recently become a big economic issue for folks here in the United States, and especially here in South Florida.
Oh, absolutely. Across the country.
So what's ended up happening is that people who had listed their homes for a certain amount and with an expectation that they were going to have a very, very wide pool, people who were qualified to buy it, or people who had a significant amount of cash before some of their holdings and some of their investments kind of, shall we say, lost some value. Okay. But basically what happens is that you're seeing that inflation's fears and inflation reality, okay, has also caused some people to kind of reevaluate what their positions are on the price of homes. Now, at the end of the day, there's one very, very common, very, very golden rule, is that home buyers have to be able to afford their mortgage payments and all the other things that are in their budget. Okay?
Right. Where we're seeing it's getting harder to do.
Right. Yeah. Basically, what we're seeing is that the costs of with costs on the rise, and those costs are anything from, I'll go ahead and talk to you about the elephant in the room, baby formula, meat, vegetables, gas, all those kind of things.
Oh, yeah, gas.
With those costs on the rise, many home buyers they're hitting their financial limits. I mean, basically, they're stretched in, okay? And what sellers are going to find out, they're going to figure out pretty quickly, is that of the 50 people who were qualified to potentially purchase their property in January, now here in June, that 50% has gone down to like 25 or 30% because the cost of things have gone up. The other thing is mortgage rates. I mean, basically, back in January and February, rates were in the low to mid twos and sometimes kind of approached up to the threes. I mean, now we're looking at rates in the 5%. Now, that should not scare folks away because those are still traditionally, historically very, very low rates, okay? But they're not as low as they were 3 to 4 months ago, okay? And just as an FYI, later this month, the Fed is going to meet and they're expected to ratchet rates up again, maybe 1/4 to 0.5% in an effort to keep inflation in check and to stave off a possible recession. So basically what's happening is that today's buyers are finding out that they've lost 30% of what they could possibly get last year, this year. Somebody who qualified for a $600,000 or $700,000 home, maybe now all they're qualifying for is a $450,000 to $500,000 home. There's nothing wrong with that. It's just the economic realities of what's going on. This is actually causing buyers to basically kind of ring fence in where they can look to find places. And it's also given them cause for pause from the standpoint of saying, you know what, maybe until these things kind of stabilize a little bit, maybe I need to consider renting. Maybe I need to put off buying that big house. Maybe a townhouse will do for now, or even a condo will do for now. It all depends upon your lifestyle and the choices that you need to make. One of the other things that's to me, that was a kind of a key indicator is that according to the American Mortgage Association, mortgage applications have dropped 10% in May. I'm not talking about refinances. This is purchase mortgages. That's basically indicating that people are thinking more strongly about it, thinking more significantly about it, and they're putting their things on hold because there is so much uncertainty going on. Where we're seeing things that are kind of changing and more of a state of a flux anywhere else are the areas of the country like Boise and Phoenix, the Southeast and Florida, and all over Texas. Those are the areas of the country that saw the most rapid increase in price values and everything else. For example, in South Florida area, home values over the last 2 years have gone up like 37 to 42%. I mean, that's previously unheard of, which has also given rise to people saying that there's a housing bubble and it may break. The other thing, the mid-tier markets, if you will, which is basically, depending upon where you are, single-family homes that start at about $425,000 to $450,000 and go up into the 700s. Those are the ones that are going to be most affected because those are the ones that a year ago, when the interest rates were lower, those are the ones that a lot of the middle-class buyers were going to be looking at because they could afford to buy more. Now, with inflation, rising home costs, you're going to find them, they're going to kind of creeping back down again. So the lower end of the market is probably going to fare a little bit better because there just aren't as many affordable homes for sale in the lower end of the market. I think sales for those are going to remain brisk because those typically have a shorter sales cycle and people pretty much know what they're getting into and they go into it with the mentality that it's going to be a short-term thing. It could be anywhere from 3 to 5 years, whereas the average that most folks stay in a home in the United States now is somewhere between 7 to 10 years. They're willing to go out and spend a little bit less to get into something now, knowing that it's only going to be a 3 to 5 year plan. Now, however, that all being said, high mortgage rates haven't really pushed prices down yet, at least to the point to where a lot of the economic analysts had expected it to be. Prices may rise a little bit more before they kind of stabilize because of some of the areas that have less inventory available now than they even had 6 months or a year ago. And actually what we saw is the median sales price for single family homes is up 25% this year over what it was last year. Even condos and townhomes are up almost 20%, looking at the most recent statistics from April 2022 compared to April 2021. We predicted that that's going to come to a close pretty quickly. Suzanne and I are looking at stabilization of the market to start long about the end of Q3 2022 and kind of continue into Q4 2022. And we should start to see some real strong moderation in time for the spring/summer buying season in March, April, and May of 2023. The other thing is that, and we learned this from history, okay? Prices can fall, okay? And, the question comes down to, is it going to happen? We know it's going to happen. Is it going to happen now? Okay. And if it's not, when is it going to happen? Because everybody wants to try to be, the buy low, sell high type of a deal. Okay. But with higher mortgage rates, the housing market is going to have to adjust.
When is this going to happen?
I believe that prices are going to dip somewhere between 5 and 10%. Okay. In some of the more overheated, some of the bigger real estate markets, it may be a little bit less of a dip down between 1 and 2% in some of the more moderate markets.
So what could keep prices high and growing?
There are a lot of forces that are likely to keep home prices high. The biggest is probably we are going through what is known as a historic housing shortage. I mean, we haven't seen housing shortages like this as long as I can remember. We had a pandemic that came out that basically kept everybody in their home and forced everybody to kind of relook at what it is they're looking for in their home.
A personal look at their family choices.
Exactly.
And really, where do they want to be?
Exactly. We have supply chain issues that are almost unprecedented except for wartime. And builders are seeing products that they were used to building in 4, 5, or 6 months and are now taking them 13, 14, 15 months, and the prices are going way up. What's happening is that you have folks that have written contracts on new construction for a property that maybe the offer that you made or the contract that you wrote in November or December of 2020, even here in June of 2022, you may still find that home is not built. The builder's coming back to you and saying, hey, look, this is beyond our ability to control. You're going to have to pay more for this because we can no longer build this home at that price.
Or cancel the contract and we can turn around and sell it to someone who can afford it at that price.
Yeah, as a result of that, builders are not able to get homes up quick enough. There's a huge labor shortage. There's supply shortages. Okay, and there's also local zoning laws. The other thing is that, and despite the number of interested buyers, okay, a lot of times sellers are reluctant to do anything because the question that comes out is, okay, great, I sell you my home. Now where do I go? For folks that are looking to either move into another area or folks that are looking to downsize, the answer is pretty plain. But for a lot of folks, basically it's okay, yeah, great, I'm going to go ahead and sell my home at the high point of the market and basically make a premium on it. Okay, so what do I do? Okay, we've actually had a number of folks that have asked us that question. We've worked with a number of our clients to deal with that. So, and if that's a question that you're asking yourself,
comment below.
Drop us a little comment below. We'll reach out to you and we'll kind of give you some of the things that we're talking about doing. The other thing is that I don't want to call it keeping up with the Joneses in as much as basically what ends up happening is that you see folks that are a little bit behind. Maybe their neighbors listed their home and got it and sold their home for a neighborhood high price. And what ends up happening is that the perception of the sellers now come out, well, why should we get that too? Or maybe even more. So what ends up happening is that because the market has changed from when their neighbors sold their home 6 months, 8 months, 10 months ago, okay, they may not want to settle for the little bit lower prices that are being offered, okay? What can end up happening is that they can pull their home off the market, again, adversely impacting the amount of inventory available to do it. And the thing about it is that like everything else, okay, sellers get attached to a certain idea as to how much their property is worth. Now, I've said this before and I'll say this again, the value of something isn't necessarily what the seller is selling it for, it's more along the lines of what the buyer will buy it for. Now, there are market conditions, we're seeing this in homes, we're also seeing this in the car market, okay, where basically prices are inflated. Over the long haul, when you have supply and demand that are kind of on an equilibrium, the value of something is determined by he who's paying for it, not so much by he who is selling it. It can also take a while for sellers to kind of get the message that a buyer isn't willing to pay the asking price, okay? And it may be that there's concerns around whether or not it'll appraise. There's concerns around whether or not amenities that were supposed to be there are there. There's always folks who can afford a higher price, okay? And buyers know that. I mean, sellers know that, so they kind of, they'll kind of wait. We see a lot of that down here in South Florida where we have a lot of, out-of-country investors who will come in, they'll buy a property down here in South Florida for either vacation or they'll buy it for one of their family members and whatnot. And basically they come in, they pay it, they don't really care what it appraises for. They see it, they like it, they buy it, they move in, everything is great. The other thing is that, and folks, I'm just gonna be candid with you, what we're seeing now is that a lot of single family homes in this area, because of the shortage of rentals in this area, when a single family home comes on the market, you'll see a lot of investment companies and management companies who will buy that home and turn around and rent it out. For example, in Coconut Creek, I've checked in the month of April, there were only 6 single-family homes available for rent in the entire city of Coconut Creek. That's a city of 70,000 people. That's not a whole lot of availability for folks. Okay.
Oh, and that's just one area that happened to check.
Right. Well, we have some clients that are looking to purchase in there. The other thing is that when you see this kind of activity, this kind of fluctuation in a housing market, there's always a specter of foreclosure kind of hanging out there. We had people who were able to get deferments on their mortgages for a couple of months, and you had people who basically didn't pay their mortgages. You had investors who own rental properties where they didn't collect rent, sometimes up to a year. Because of the amount of equity that are in homes today, most of the lenders decided they did not want to become property owners, nor did they want to become landlords. So they went back out and they came up with the arrangements for people who had fallen behind on their mortgage. And so basically they kind of staved off that whole foreclosure piece of it. So the other thing is that, and we've seen this in the news recently, this has become something that's kind of near and dear to my heart because it's something that I haven't seen in a long time. It's that nasty little R word, recession. There are some folks that are basically saying the recession is imminent. Some folks have said we're here and stuff like that.
It's on the horizon.
It's on the horizon,
right?
Okay. Some people are blaming the war in the Ukraine. Some people are blaming all kinds of, but basically one of the things that we're seeing, especially because of the amount of equity that's in the market, that is in people's homes, and because of even the mortgage market is right now, the housing market should be able to weather this over the long term. There may be a little blip depending upon upon what happens later on in the year from a political perspective. But most folks who are going to plan to spend time in their home for the next 4 or 5 years or even longer, we don't feel the recession is going to be as much of an issue as a current housing inventory shortage and the fact that there are still far more buyers than there are sellers that are leading to a longer time for prices to kind of moderate a little bit. It's kind of the opposite of what happened during the Great Recession back in the 80s.
What are some of the other considerations?
Which option is best for you isn't just about money. It's about comfort, it's about quality of life, it's about kind of where you see yourself, not just now, but where do you see yourself in the short-term future, maybe the next 2 to 3 years, or where do you see yourself in the next 4 to 5 years, okay? Buying versus renting is one of those things that everybody has an opinion. My suggestion is going to be ignore people who are telling you to go one way or the other because chances are they don't know about your situation, they don't know about your scenario, and they really don't care, okay? So ignore people that are telling you that owning always makes more sense because in the long run, renting is throwing money away. Disregard people who are telling you that it makes more sense to buy if your monthly mortgage payment will be the same or less than your monthly rent payment because they don't know what kind of reserves you have. They don't know what else you have your money earmarked for.
Right,
okay?
what your obligations are, what your situation is, family lifestyle.
I mean, the housing market and life circumstances are far too varied for people to make blanket statements like that. So we call those dream stealers. So I would ignore those kind of people. All prospective homeowners need to weigh the risks that are involved. Getting a mortgage often requires a significant amount of money up front. Okay, it also may require you to put your life on hold for 30 or 45 or even 60 days while you're going through the mortgage process. If something comes up, okay, you're going to be evaluated on whether or not you qualify for a mortgage based upon how much debt you have and how much resources you have and what your assets are and everything else. So when you make application for the mortgage, and every loan officer will tell you this, and every realtor will also tell you this, don't make any changes. Okay?
Such as maybe buying a car or purchasing big item, ticket items like your washer, your dryer.
Well, yeah, you want to wait till after you move into your house to get your washer, your dryer, and your furniture. But the other thing is that doesn't give consideration for any emergencies that may come up. You may have something that's unanticipated, an illness, a medical issue, a family emergency, or something like that. So you need to take this all into kind of consideration. But on the flip side, if home values do go up and you purchase and you get in there and you get when the values are lower and they do go up like they have here in South Florida over the past 2 or 3 years, you can have some extraordinary gains. The flip side of that is basically, hey, you know what goes up eventually does come down. You can lose a lot and maybe lose everything if prices fall too much. But that all being said, there are still a lot of folks who choose owning over renting for a couple of very, very key reasons. And they're more lifestyle reasons than they are anything else, okay? It provides a sense of permanency. You get an emotional and a mental sense and a physical sense of permanency. I own my house. I live in my house. My kids are going to go to school here. We're going to be here. We're going to be part of the neighborhood. We have friends. We have neighbors, so on and so forth. The other thing is that it gives you the opportunity to create the kind of residence you want. You can't make a whole lot of changes to a property that you're renting. You may not even be able to paint it the colors that you want to paint it, let alone make any internal changes as far as putting shelves in or putting cabinets in or stuff like that. Whereas if you own the home, you can basically do whatever you want to because it's yours.
Yeah, and it's your taste.
Okay. The other thing is that one of the things that has come up recently is that folks are asking us, why are rentals so high here in South Florida? Most recently, why they're so high? The big reason is that as few homes as there are to purchase, there's actually even fewer ones to rent. Demand is so very, very high. Folks come down here, they're not sure what they're going to do. They're not sure where they want to be, so they kind of look around. In fact, I read something recently that in 2021, there were 147,100 new jobs created in the South Florida area, okay? And they're anticipating an even larger growth in 2022. And there's just not a lot of property available, be it rental or be it purchases available. The other side of it is that in the case of a lot of the single family homes that are coming on the market, institutional investors, management companies, and other larger investors buy those homes. They'll turn around and they'll rent them out because they basically know that the rental market is so tight, they can almost get whatever they're asking for it. So those are kind of the things to kind of take into consideration, things to kind of think about. So
what are some of your final thoughts?
Okay. Some experts say it makes more sense to rent than buy in South Florida, but only if you reinvest whatever it is you're not going to pay to purchase and you reinvest it at a higher rate or you save it. The reality is that with no real end in sight to our scorching housing market, I mean, it's just going through the roof. Real estate economists said that this week is basically, it may make more sense in many cases to rent until things kind of moderate a little bit. But again, that kind of determined based upon your risk factor and what you want to do. There are some folks that we've spoken to who are coming down here for the express purpose of renting. They want to have that flexibility to be able to come and go as they please, go wherever they want to.
Check out our videos on short-term rentals.
Exactly. The rent in Miami, Fort Lauderdale, West Palm Beach area is up 57% over last year. Basically, the median rent in South Florida right now is $3,000 a month. That was, at least it wasn't in March of 2022, which is the last statistics I have. For renters, the demand for affordable housing continues to just explodes, going through the roof. But again, do what feels comfortable to you. If you're going to buy a home, do your research. Make sure you're getting the best deal for your money. That means working with an agent that you can trust and you have confidence in.
Or
Okay?
agents like us.
Agents like us. If it's a struggle to do so, if it's a struggle to do all this kind of stuff, then maybe that's a sign. You do not want to be what we call house rich and cash poor. The other thing is ask yourself, is now a good time in my life to buy a house? And we're more than happy to help you work through those things. We can introduce you to loan officers, we can introduce you to inspection companies, and everybody else is part of the process that you can talk to, okay? We're not looking for you to do necessarily do anything today, okay? We're here for the long term. Here's the thing, it may be perfect for your neighbor to do something, but it may not be good for you, okay? So you need to weigh all the pros and the cons, take a look at what's gonna be best for you, okay? And don't let somebody else who doesn't know your situation or your circumstances dictate what you're going to do. A good rule of thumb is if they're not gonna be paying your bills, okay, then you really don't need to be listening to them. Hopefully you found this informative, you found it interesting.
Hey, and when you hit the like, that would help us out.
Definitely, and consider subscribing.
Until next time, watch out for our next video.